Hello guys, John here with another easy stock system video. Today we're going to go back to the basics and cover just simply what a stock chart is and how it can help us look at a stock to understand what it's doing. I've been trading stocks now for over 17 years. And a lot of people know that I trade stocks, so I'll get hit up by friends that say, hey, you know, I'm interested in trading in the stock market. Can you show me how to trade? And I can, but it takes time. So, you know, part of the reason I wanted to create these videos is to help people that are learning, just beginning, understand the basics. And this is going to be a very basic video. And I'll go ahead and get started. We're going to pull up stockcharts.com. And I like stock charts because it's free. In the basic form, it can be helpful for just about anybody. We're not getting fancy here. We're just trying to look at stocks and understand what we're looking at so we can make good choices when we enter a trade and good choices when we exit a trade. But before we even get into trading, we need to understand what we're looking at. So I'm going to go over the basics of a standard stock chart. So let's pull up a company that everybody knows. And if you don't know the ticker symbol, you can just start typing. So let's look for Costco. And there it is, COST, Costco Wholesale Group. And if you hit go, you don't even have to hit go. It's just going to bring up a standard stock chart for Costco. So let me scroll the screen down a little bit and I'll show you what the default chart looks like. And a lot of times, even if I get a hot stock tip or somebody says, hey John, what do you think about this stock? I won't even go into more advanced tools. I'll bring up a standard stock chart, look at it, and a lot of times just by looking at the basics I can say yay or nay, I think it's a good time to enter, or I don't think it's a good time to enter. So trading doesn't have to be complicated. There's a lot of guys out there that make a lot of money that know how to do some really complicated things, but we're going to try to keep it easy. So anyways, we're looking at Costco's chart. Up at the top it tells us this was as of March 16th. It had an opening price of $166.78, a high of $167, a low of $166.26, and closed at $167.06 with 2.7 million in volume, and it was up 52 cents for the day. The next area right here, if we look at, is the RSI, or the Relative Strength Index. And what RSI tells us is if a stock is overbought, which would be the area above 70, this area here, or if it's oversold, which would be this area here. And what these overbought and oversold signals tell us is they're not easily maintained. There's going to be more selling pressure when we get up into the overbought area, and I'll show you an example here. If we look back around December 16th through 20th, the RSI crossed into the overbought area, and so not long after that there was some selling pressure, and we see it here in our chart. We had a little downward trend from 164 to 158. So that's what RSI tells us. That's how it can help us. It happened again here, although it lasted quite a bit longer. Stocks can stay overbought or oversold for a while. So this is just one of the indicators that we use to decide where the price movement's going to go, or predict where the price movement's going to go. Okay, so the next thing that we look at in our chart is the basic area in the middle here. In the basic stock chart system shows us this Costco, the moving average 50 and the moving average 200. 50 is the blue line, the 200 is the red line, And these lines, the 50 and the 200 are probably the most popular moving averages. They tell us the trend of the stock. We can see on the 50-day that we're in an uptrend. We can see on the 200-day that the stock is in an overall uptrend. And you can tell by looking at the candlesticks, and that's what these are. These are all candlesticks that represent 1 day's worth of trading, and those also show that Costco's in an uptrend. So even though it broke down here and dropped off, the overall trend is up. And on a side note, we like to trade in the direction of the trend. So it's very, very risky to trade against the trend. So as we scroll down, the next section is an overlay into the chart of volume. And you have red volume days and black volume days. The black days are more buy than sell volume, and the red days are more sell than buy volume. So that's pretty self-explanatory. The scale is here with the average for Costco being roughly 2.5 million shares traded per day. And that's another thing I'll mention here. When we trade stocks using the system that I'll be teaching you over the next weeks and months here on YouTube, is I like to trade stocks that trade at least 1 million shares a day or more. They're more liquid, they're easier to get in and out of, they tend to be less violent, and your trade orders are generally executed immediately. So there's some advantages to trading stocks that have a lot of volume every day. Okay, so the next part of our chart is the MACD or MACD. And what the MACD is a indicator, it's a lagging indicator that tells us the movement of the stock. So stock charts gives us both the lines, the crossover lines, and the histogram. So MACD is useful as a confirmation. For example, if we look here, here's a confirmation of the black crossing the red on a downturn. And if we look up here, that was right after this day where Costco dropped from 177 to 170 in the very next day. So MACD can be very helpful. I generally use it for confirmation. But the next thing I'd like to show you that's not on here, and this is how I set up my basic stock chart, is under MACD, under indicators, I will add the slow stochastic. And the stochastics oscillator is really cool because it's more of a leading indicator, and it can give us information on when to buy and when to sell. And if we look at the stochastic, it looks like a bunch of squiggly lines here as well, but very similar to the RSI. At 80, the stochastic is considered overbought, and below 20, the stochastic is considered oversold. So we look for things like that because when we look at crosses that happen when the stock is oversold, like this instance, November 7th, we see a definite turnaround following that. So we look here, this was pretty much the low of this time period, and we had this stochastic cross, and after the cross we see the stock increase in price. So had we bought down here in the 143, 144 range, we would have enjoyed profits, looks like all the way up to 177, which would have been nice gains for us. So anyways, this is the main three things that we use: the RSI, the standard stock candlestick chart itself, the 50-day moving average and the 200-day moving average. And back to the moving averages real quick. When you have a cross like we saw here on January 11th, it looks like, where your 50-day crosses your 200-day, that's considered a gold cross, and that's a bullish signal. So had we been looking at Costco in this time period, we saw the gold cross here, and maybe got a couple of other indications like this cross on the stochastic. We may have thought, hey, this is a good time to buy in. And we can also use the candlesticks for confirmation, because they tell us a whole bunch more than what they look like here. And I'll try to show you an example. But to explain candlesticks real quick, clear candles or candles that are not filled, like this one, have a higher closing price than opening price. So in this instance, on November 11th, the stock opened at 146 and closed at 148. Same with this one, the stock opened at 150, closed at 150, 159. So we look at a solid candle, then it closed lower for the day. It opened at 149, closed at 148. And that's the case with red candles as well. For the most part, red candles are going to be filled, but if we look at this one here, it opened at 149 and closed at 150. So even though it was down for the day, it closed higher than it opened. So those are some things to keep in mind when you're looking at candlesticks. But candlesticks also form patterns that can help us make decisions when we're buying and selling stocks. And let me see if there's one here that's real evident to show you guys. Here's one. Let's look at this doji in the downtrend right here. So we have a doji in a downtrend. We have a doji in a downtrend, and what that tells us, generally a doji in a downtrend is a reversal signal. So that's just another way to confirm, hey, I may want to buy in here. And it was accurate at this time because it traded up after that. Now the same thing, a doji in an uptrend is usually a reversal to the downside. So we see that here a little bit. Then it took off, the stock took off again. But in later lessons we can go over a lot more candlestick information and candlesticks in detail. There's nearly 100 different candlestick setups that can tell us something. But there's some real popular ones that we use to help us make good decisions when we enter and exit trades. So anyways, that's the basics of a basic stock chart. In the next lesson, maybe we'll look at a stock and maybe try to determine if it's a good time to buy in. But anyways, I hope the video was helpful, and I look forward to seeing you guys again. Thanks for watching.